Good morning, Paul Georgie from Allendale. It's July 7th, 2010. The outside markets are quiet here this morning as we speak. The dollar up 14, crude up 80 cents, and stock market pretty much steady to a little higher at this point in time, which would suggest a higher opening of the stock indexes and the stock market on Wall Street here at 8:30. Markets focusing today on looking ahead to USDA supply demand report. Some of the features there are, will the USDA raise the corn yield? And Rich Nelson here in our office says they will not raise the yield this time because we have moved the crop conditions in line with what is normal for the USDA at this time of year and for the crop conditions at this time of year. Good to excellent yesterday, dropped 2% in corn, down from the 73% last week down to 71 this week. Trade was looking for a 1 to 3% decline, so right in line there. Weather conditions, the heat and dryness in northern China is still a concern. However, there is some weather reports that some areas in northern China are getting rain as we speak. The U.S. weather, however, is ideal for corn growth at this point in time. However, 6 to 10 and 10 to 14 day outlooks are drying up the forecast, so to speak, and putting a little more heat in. So that is concerning the trade, as we've got such an excellent growing condition now in a lot of areas that the poorer conditions will increase, and that will give us some incentive to rally this corn market. The early calls are pretty much higher across the board in the grains, 1 to 2 higher in corn, 5 to 7 higher in soybeans, and steady to 2 higher in the wheat. Crop conditions in beans declined yesterday. 1% went from 67 down to 66%. The wheat conditions also were down 1% in the winter wheat and in the soft wheat areas. Weather conditions and forecasts, traders are looking at the hotter, drier temperatures here over the next 10 to 14 days as a plus for soybean market, and giving us some strength here in the November beans. November beans overnight found good support around this $9 area. If we can hold that level, I think we've got a chance to work our way higher as we get into this warmer and drier period. However, if we break that and close below the $9 area, I think we've got a downside target here of around the 860 area as a downside objective. Now, the USDA report coming out on Friday will be concerned about ending stocks in soybeans. How much of a change will we get there? There was reports out of Brazil this morning that the Brazilian agency is suggesting that their soybean crop is going to be about 500,000 tons greater than what they were expecting. So we'll see if the USDA adjusts that, and looking at the total world picture. But we're still going to be concerned about in soybeans the old crop, what kind of ending stocks we're going to have there versus the ending stocks in new crop. Wheat, the weather is impacting wheat market the most right now, and especially with the dry conditions that are reported in Russia and Kazakhstan. Very dry conditions there, and hot temperatures are hurting the wheat crop, and they're suggesting they're going to have a considerable reduction in their wheat production out of that area. So that's being monitored very closely. South America, or Southern Hemisphere I should say, Australia seems to have got some rain here overnight, so that would be a little bit bearish. But overall, the wheat market is focusing on harvest here in the U.S. We're moving right along with harvest. We're 54% done, the USDA said yesterday, versus 50% last week and 53% on average. So looking for, with the technical action that we seen yesterday in the grain markets with an outside day down, that will more than likely weigh on this market on any kind of rallies here today. I would think that rallies in the grain markets will be sold, especially ahead of the report on Friday morning. The livestock trade, we got cash cattle offered at 93. That's $2 higher than the trade last week. Cutout values have improved some, and giving the feedlots the edge here and the reason to offer cattle $2 higher. There hasn't been any qualified bids yet, so the packers are waiting for later in the week. They've had short kill week this week, so they've kind of got the upper hand here in the near term. But we expect that we could see cattle trade steady, firm from last week when it's all said and done. So cutout values were up 54 in choice yesterday. Select was up 2 cents. Chart-wise, we've got resistance in the August cattle around that 90.40 area, and support around 88.50. In the pork, cutout values there were lower. Cash markets are a little lower here this morning, and the overnight trade in the electronic hog futures would expect that we'd open here in the open outcry at anywhere from 10 to 30 lower in the August contract. The lows of yesterday, extremely important in the August hogs at around this $80 area. If we can hold that, then I think we got a chance to rally back and stay in this trading range. But a breakout to the downside below 80 bucks projects all the way down to $78 before we could stop this slide. So maintain your contact here with the Allendale Research. I would be happy to visit with you, answer any question you might have. Give us a call, 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.